Joining us today is Goshka Folda, President and CEO of Investor Economics. Goshka, thanks so much for joining us today.
Thank you for having me.
So, Goshka, this is an ETF conference. What did you come here to talk about today?
Well, actually, my job today was to really talk about the big picture of investment industry or wealth management industry at large. So ETFs are clearly a big success story. We've seen tremendous growth in ETF investing in Canada for the past more or less decade. But there are some other big trends that advisors, as they prepare for the future, have to keep track of. And so that was my job, to set the stage for what it will take to be a successful advisor of the future. So I know that your website is all about that, so I think that's a pretty good topic for us to talk about.
That's great. Yeah, times are changing. The audience for advisors is changing as well. And so what are some of the insights that you brought with you today to share with advisors?
So today I try to, I like to tell stories, and I try to spin a story of almost a quarter of a century of Canadian investors and really think about the demographics of investors and how that is changing, because that is really placing new challenges in front of advisors. What I mean by that is, if you think about 1992, this is when many baby boomer investors cut their teeth on their first investing, their first mutual funds, their first advisor relationships. And really, since that time, that massive baby boomer generation has been almost a commanding presence and a real great engine of growth for the advice givers, for advisors on the front lines. But now, as we're approaching 2020, of course, this is the massive generation that is approaching retirement. So the major question that advisors have to ask themselves are, they have been the advisor of choice for the wealth accumulation phase.
Right.
Will they be advisor of choice for the retirement phase? Do they have the right product set, the right toolkit, the right competencies to approach this cohort that is increasingly their investment horizon is becoming shorter, their risk profile is changing, they have to think about growth, but they have to be very conscious about the risk that they are taking.
Well, there's more tools than ever. I mean, when you combine mutual funds and ETFs, the universe of products is vast. I mean, it's even more vast than it ever was. Some of the different tools that are available are changing. Some of them are becoming more favorable to today's market. I think one of the big changes is technology, and the very rapid ramp up in technology that has changed maybe the way tomorrow's investors will take delivery of solutions. So what is it that advisors can do to get ready for the coming change?
So that's a really excellent question. And technology is kind of a double-edged sword, because in some ways, technology providers or companies, like we hear about the Fintech companies, the emergent technology-driven providers like the increasingly omnipresent robo-advisors, are placing a competitive strain on the traditional advice giving. But what I also think is technology has also the great ability to assist advisors. And I think that we're beginning to see many robo-advisors actually working with advisors to help advisors modernize, if you will, the way that they engage their clients, that, eponymous client experience, the Uberization of the client experience. Are you, as an advisor, cognizant that your clients are increasingly keen to connect with you 24/7, have a mobile solution? They want for you to be more accessible, more contemporary. So that's where technology can have a really big impact. But another space for technology, and I think it's well connected to the ETF revolution, if you will, is the fact that increasingly the science of portfolio management is also beginning to benefit from very modern technologies. We're just at the beginning of the phase where artificial intelligence and ideas, the vast power of computers is going to be leveraged to build ideas to support portfolio management, but also wealth management process. So I think it's good news, but I think in the short term, technology is also placing some further scrutiny on the costs of not just investment management, which is something that ETFs have really benefited from, but also the cost of advice giving. So if you, as an advisor, are not looking at robo-advisors who are, if they're doing for 25 to 35 beeps, they're doing risk profile and strategic asset allocation rebalancing. And you are in a category where you're a top advisor, you would like to collect 100 or 1.5% on in fees. What are you doing to relate yourself to that robotic advice?
Well, certainly. I think there's, I think historically there's been a fair bit of resistance, consternation, maybe even some fear. Am I going to be replaced by a machine? On the other side is, why haven't advisors just simply said, let me adopt the service, make it part of my business, and then by doing so, be able to attract the investors who that appeals to, and still be able to carry on the traditional advisor role.
Yes.
But how do you think the advisor role will change beneficially for the advisor and the investor? What's the advisor's role in a world where all this technology, all this access, all these low-cost investing solutions are available? What is the advisor's role? How do you see that changing?
It's quarterback, but much more, I would call it a holistic quarterback. I think that actually it's a great time to be a great advisor. I think that the technological disruption is also a technological gift to all of us to iron out all these mundane things that we do every day. And I think that from that perspective, some of the, for example, rebalancing or client onboarding, all of that can be greatly improved with using technology and partnering with robo-advisors. We actually hear many advisors already going that route and really using that. You know what the great challenge is, though, is that you have to know your value narrative, and you have to think about the future not just as this investment quarterback, which is where many advisors in Canada have really cut their teeth. This is their comfort zone. We've seen that retrenchment many times, even after the 2008-9. Everybody goes back, I'm going to own the investment solution. I'm going to do it. I know what to do. And that is great strength. But I think as we think about the older clientele and then also the younger clients and the Gen X generation, the sandwich generation that needs a lot of help, will probably work a lot longer beyond 65, will need a lot of hand-holding. You have to think that there needs to be some kind of bandwidth in the system, which if you are kind of a traditional advice giver, is simply not really there. Time is the advisor's most precious commodity. So how do you change? How do you leverage technology to take out some of that day-to-day work? And you just made an excellent point. How do you attract the new investors, the millennials who don't yet control a lot of wealth and will not control a lot of wealth for at least 20 years, according to our projections at Investor Economics and Strategic Insight. So I think all of that spells opportunity, but not every advisor is as open to it, because we also have had pretty good markets. So at time of good markets, some of the structural pressures that are emerging in the system don't really need to be, they are not as articulated.
Sure, there's some complacency.
There's some complacency, but it is also the time to really polish the value narrative and say, listen, this is how I can work with you. There's a great study from Vanguard that's called the Alpha of Advisors.
Right, exactly.
And interestingly enough, the most powerful portent of value for investors in this study is the behavioral coaching, is the hand-holding.
How about if you offered the robo and you're there to mediate? You're there to say, hey, okay, I agree with 80% of this, maybe the other 20%. You should think about it this way or that way.
Yeah, and that's a great point.
And then the client, the investor, can turn to the advisor for maybe for reassurance or for guidance. Am I doing it right? Does this look right? And then there's fine tuning, and then there's obviously the long-term planning as well.
Absolutely.
Goshka, thank you so much for joining us today. It's a pleasure talking to you.
Thank you. The pleasure was mine. Thank you.